Good morning and welcome to Equity Story. Wednesday, the 12th of July, middle of the week. I'm here with Claude and we're going to talk about the thought of the week. This week will be, what are you chomping at the bits to buy, right? What is your number one target to buy maybe over the next month? That thing that you obviously really like and maybe starting to nibble, maybe, starting to really look pretty strongly at it. So that will be quite interesting to have a quick chat about that. Apart from that, of course, we're just going to go through our usual what happened last night, some announcements this morning, and anything else that might pop up. Before I go on, so welcome, Claude. Before I go on, I've got the Equity Story disclaimer in front of you. Every stock that we talk about is general information only, general advice only, and we focus on the technicals and fundamentals only. All right, so I've got that out of the way. I'm going to change the screen because I want to show you what happened last night in the US. And you've got it right now in front of you, hopefully. So you've got the Dow Jones, S&P, NASDAQ, all positive, which is nice. Remembering that today we've got the CPI figures out in the US tonight. So that could, of course, see a bit of volatility in the US, depending, of course, how it is. I think just reading some of the details from some of the brokers and some of the analysts in the US, they're expecting a interest rate rise. I think 93% chance there's going to be interest rate rise in the US. So that's all already priced in. So which is nice to see the markets behaving okay. So recovering slightly after that pretty poor week last week, really, and pretty bad start to our markets on Monday. So anyway, so that's positive. When I look at gold, is still sort of creeping back up. So that was, we looked at it yesterday. It's swinging nicely, the gold price. So maybe that's why there's some of the gold stocks are looking fairly positive. We'll see how that goes. And you can see the US sectors, everything was in the green really. So, we're expecting some good stuff today on our market as well. And we'll show you a few of those stories today. All right, so just quickly going through the actual trading economics where you've got the announcements. Like I said, I think 10:30 tonight, we've got the inflation and core inflation numbers. Also at 1:10, we've got the RBA low speech. That's also quite important for us. Might lead us to some sort of swings on our Australian market. And then we will look at the actual commodity space. Not much happening, to be honest. We've seen another little fall in uranium down to 55.65. That's maybe why the uranium stocks are a little bit weaker. Other than that, we've also saw, I think I saw iron ore better, still fairly steady, lithium fairly steady. And if I go down to copper, yeah, nothing really happening. I mean, that's what I'm sort of getting out of this. Nothing really happening in the commodity space right now. There's nothing super hot where you go, I'm getting in. All right, let's switch to now some announcements. So I'll get the screen again for you to see some of the charts that we talk about. Really not much, again, not much still announcement-wise. We are starting to get into this quarterly flow where there's going to be some announcement coming through, but still fairly quiet. So let's look at a couple of from yesterday. So if you didn't listen to or didn't join into ATA, Megaport was the big one yesterday. Really had an incredible move yesterday, about 30%. On the back of that, we are getting closer to very good profitability. And EBITDA is being positive as well. So they're really turning the corner, cut costs a lot. Market had to react positively to it. It was a fairly shorted company as well. So there's probably some shorters covering the stocks. And it's looking okay. So today, I think it's jumped another 7%. So that's almost 37% up already in 2 days. That's looking pretty good. If it can stay like this, it's going to be a buy for the traders out there. Let's look at another one that's delivered some sort of news, I think yesterday, Mighty Craft, and that wasn't great. So let's have a look at that. You can see positive, negative, so it's falling down like a stone, so you wouldn't be touching that one. Let me see, IRI, I'm not sure if you saw that one, Claude, but integrated research, not great on the charts, I have to say. It's sort of trying to get through those trend lines, but it's struggling. And I saw there's a little bit of growth, I think, out of integrated research, but it has been a fairly poor performer over a long period of time. So not for me.
It's amazing. It was like 10 years ago, it was like the same price as it is now. It went on a sort of humongous run all the way up to, I don't know, $2-3.
Yep.
And then all the way back down.
Well, let's have a look at the 10-year run. So yeah,
$4.
look at that. Four almost $5. Look at that. And down to 45 cents. So just shows, right? That you can never buy a stock and hold it forever. You got to probably keep tabs on it and just see how it goes, because you just never know what can happen from, year to year or even quarter to quarter. So you've got to be to me, always being an active investor is the way to go. Last one I just want to quick have a look at is LGP, because it's a little cannabis stock, but it's got this French connection where it's got trying to sell its cannabis to the French government. And I'm sort of, I'm digging in a little bit. It's probably one of my favorite little cannabis stocks. Nothing's trending at the moment, by the way, in the cannabis stock space, so I wouldn't be getting into it yet, but I always like to have a look on the watch list, put a couple of cannabis stocks on there. And if it starts trending, if the market overseas starts trading in the cannabis stocks, I sort of maybe have a look at it as a trade, but definitely not trending at the moment. But is one of my favorites in this space in Australia. So if you are ever interested, put it on your watch list and see it, down the track. If it starts trending, we might have a look at it. Let me see what else I've got. IG6, I think. Let's have a look at that one. International Graphite. So they had some pretty interesting graphite results today. Has it moved at all? 25%, I think. Is that right for the week? Or was it today? So 5% today. It's had a jump yesterday. Didn't have, obviously, somebody let the cat out of the bag that they're going to come up with some decent results. They did. It jumped in again today, another 5%. But are they good enough for me? Possibly not. They need probably drill a bit more graphite. They had some really strong hits, but very, very thin hits. But it wasn't quite enough for me. But anyway, it's not bad. Not tradable at the moment, still trending below. So for me, I wouldn't be touching it. You can see here below. All right, Claude, let's talk about our thought of the week, because I asked you really in the morning, give me, because I was struggling to think about something, right? And I thought, well, look, I've got a few stocks that I'm sort of chomping at the bit to buy. And I'm thought, okay, well, I'm going to ask you, have you got anything exciting there under your bonnet that you want to maybe bring out and say, I've got this, that's, I want to really, really get into over the next maybe month that I've been having a look at. Maybe it wasn't trending. Maybe you thought you just needed to give it a week, but it's probably my top of my list that I want to buy. So I'm going to give this floor to you. What have you got that you really like, that you want to be, maybe you already started buying, that you want to buy right now?
Yeah, sure, Peter. So thanks for that. One I thought I'd talk about today is RPM Global. The ticker is RUL.
Okay.
There are two reasons for choosing this. First of all, I actually already own some and bought some more on Monday, actually. So I've paid between, I think my average is somewhere between, it's definitely above $1.40 and I think it's below $1.50. So just a little bit below the current price, not far off the current price, really. Look, the story here is RPM Global is principally a company that sells software to mining companies. So say, for example, to managing the scheduling or the paths that the trucks take around the mines to check that, the processes are all safe, that, figure out, how much everything's going to cost, what's the optimum route, what's the optimum way they should organize their mine to minimize fuel usage and risks to the employees and that kind of thing. How do they design their mine? How do they actually dig it and shape it into the ground and all that kind of thing? So they visualize all of that and can plan that using RPM Global software. There's other elements of it as well. They have ESG offerings. They have this, that are pretty much expanding into almost any software that's specific to mining companies. So that's the sort of position overall. It's not too bad in that regard. It has a fairly big customers, BHP, etc., that kind of thing. Like, it's very much proven. However, as we speak right now, not yet profitable. So one of the reasons, even before yesterday, that I like the stock is because with the EBITDA forecast for the second half, I think you can probably reasonably forecast at least a small actual net profit in the second half. Now, they made a small profit in the first half. So I expect them to like actually have a small profit, which is obviously it's not a huge deal, but it does show people, this is a profitable company. It doesn't need to raise capital, so that's a positive. Based on the updated guidance they've given, I would say, it's probably only going to make, say, 3 or 4 million, or perhaps a tad more, but not a very big number at the moment. You could assume it's like on 100 times PE or whatever. But the point is that operating leverage is just kicking in. If the growth goes next year as well, then every chance what could be a $3-4 million profit this year could be a $10 million profit next year, and then still with growth on it beyond that. So it could quite quickly start to look pretty decent in terms of pricing. Now, the other thing that happened recently with these guys is yesterday they put out an announcement, basically an update on their software sales and expected EBITDA. It's a kind of tricky one, because so the good news is that basically the software sales was pretty strong, that they've taken ARR all the way up to 55 million now. So this is software subscription fees plus maintenance fees. So yeah, it's pretty genuinely recurring. That puts the company on about 6.3 times ARR. Now that's not that cheap. Kind of similar to some other like software companies, but higher than what you can get now. Like you can get some companies on 2-3 times ARR. So not mind-blowingly cheap, but it does look pretty strong with it just crossing over into profitability. On top of that, with the announcement yesterday, it was a little bit of a mixed bag, because look, the advisory team, which is not recurring revenue and does just consulting and advice on new mines and setting up that kind of thing, that's had a very strong year. And so you've got to say, well, if that could go backwards and then this company might stop being profitable, which would be a spanner in the works of the thesis I just outlined. So a little bit of risk there. That's performed well though, and so has the software sales team. So with sales getting in a little above what they might have expected. So as a result of this, they're now going to have to pay $3 million in one-off bonuses to staff, which then brings the EBITDA down to around 12 million instead of the 15 million it would be otherwise. Having said that, even next year, even if the company just grows a little bit and doesn't have to pay bonuses to staff, then you could definitely see the profit going up, just because that expense, which is, they say, one-off in nature, isn't repeated. In the meantime, it has no debt, 34.7 million in cash, which is more or less the same as last year, but it did spend 7.5 million on buying back shares again, which kind of suggests that the company itself thinks its shares are cheap as it crosses over this inflection point. So all the setup for me says that I'm happy to buy now, like hold on for the ride for the next couple of years. If operating leverage kicks in like it might, then we could suddenly see the profit from this business go from 3 to, close to 10 or even higher in the coming years. So that kind of strong profit growth will be sure to get the market's attention should it occur. That's the thesis there. Obviously, nothing's perfect. There's one big risk to the thesis that is it wouldn't necessarily kill it, but could delay it, which is if that advisory business falls off a cliff and that profit evaporates, thus meaning you don't get that profit growth. In that case, it might take an extra year longer, extra 2 years longer. But overall, as long as that software trajectory just stays well, I think that in the long term, shareholders at the current price will end up getting a better price one way or another, even if only eventually as a takeover. But it's just obviously like it's a strategic niche and it's not yet a profitable niche, but I'm sure it will be.
Fair enough. And look, I dig actually IUL. And we unfortunately had to sell out, probably about 3 or 4 months ago because it went below trend line. But you know what? That chart's starting to look very, very interesting. And if you can maybe eke out another 2 or 3 cents this week, so next couple of days, this is a buy on the chart. So you can see the turnarounds. The announcement helped as well, of course. So I think you're right. I think it's getting very, very close to that buying and nibbling and stuff, right? So it's well poised. I like it. What's happening here on the technically, and I actually don't mind the company overall. All right, my turn. So I'm going to go for something that we really both love, and we talked about it many times, and I've been, trying to find a moment when I want to buy it, and I'm getting close to it. And that's Objective Corp, OCL. Whenever we used to do our education series, Claude, this has been the number one stock that I used as my example of almost a perfect stock, right? Where it doesn't really need cash. It's got the founders in there. It's been growing profitably. It's got nice it's just got everything going for it, right? It's pretty much.
It would appear that it is a good quality business with honest, competent management.
Exactly. So it's one of those self-funding, growing companies that you want to own forever and a day. So I've always been using that. Now, of course, it's had a misstep, change in his report. It's just been unfortunate 12 months, right, for them. So I've just sort of waiting. Plus, the tech sell-off, it didn't help. It was expensive. All those little things. But
it was a tech sell-off that didn't help. On top of that, yes, they just had a softer time. Like, they get their growth from some acquisitions as well, which they fund with cash. So they didn't have acquisitions to boost growth. And yeah, revenue was a bit weaker, just pure, not their strongest section. But also their revenue has been impacted by the fact that they're moving from one-off to, they have been moving from one-off licenses to subscription. And that reduces the revenue in the short term because, you go from saying, all right, your license is up for renewal, give us $10 million, to being like, all right, your license is up for renewal, it's going to be $1 million a year from now on, kind of thing.
Yeah. And so all these little factors.
Oh, I should disclose I own shares in Objective.
I've actually been middling as well. That's why I want to talk about it, because I want to buy a significant amount of this, right, for the fun. But anyway, so we've got all these factors that we just talked about. It is poised for me. Probably my sort of key thing here is, I want to see how they report, because we know that they had that softer period. I want to see what the outlook's going to be in FY24. I want to see how the actual things are going right now. And I actually starting to look at the chart. I'm thinking this is a great looking chart where it's starting to consolidate just above. It just needs that announcement, and it's probably going to go off to the races, right? So that's the why I'm sort of very interested in this story, and I've started to starting to nibble at this company, and it is profitable. This is what we like. I'm just looking at the numbers here. It's 60 to 1 time. It's not cheap, but I remember it used to be 100 times, right? So at least from that point of view, it's not too bad. And you look at some of the other stocks like your WiseTechs and, PMEs and so on, they are expensive as well. So it doesn't stop investors buying companies, even though if they're expensive. So I'm hoping that, of course, I'd love to pick it up cheaper, but I think overall, a quality company, you're never going to get it super cheap. And you got to pay up at some point. And I don't mind collecting over a period of time when I'm thinking that if a company is going to grow over a period of the next 10 years, I'm still buying reasonably well. So I'm happy with that. We talked about it. And when I look at the company itself, Claude, and I've just been, again, just refreshing my mind. Holy moly. I mean, they've got so many products that, a lot of companies out there use that I think I'm fairly confident that they're going to do quite well over a long period of time. This is one of those companies you buy and you want to hold on and hold on and hold on. I remember when I bought it back when it was actually around the 50 cents, 60 cents mark back in the day, and I sold in $1, and I thought, I'm a genius. I've got so many stories of this. I'm a genius, but it's just proven that they're like complete dunce.
Yeah.
Somebody's stuff. But it doesn't stop me buying now, because I still think we can make some decent money out of this. So yeah, look, at 1381.
Well, it's still not in the indices and stuff like that because it's so illiquid. So it's potentially got years ahead of it before it's fully recognized anyway.
Exactly. And I think overall it's something that, like you said, it's going to develop. It's going to get more shares on issue. Probably, it's going to get more liquid. So it will cross those barriers, get to that stage where we wanted to see it, maybe in the top 100 ASX stocks, right, over a period. So look, overall, I really like it. I make a pretty strong case with it's profitable. It's got all those little things that we look at as a fundamental analyst that we really like about it. Competent management is probably the key here as well. So yeah, this is my story for for something that you guys should be really putting on your watch list, top of your watch list. And if they deliver well, like I said, I'm not going to buy really strongly at the moment. I just want to wait for that August, another month away. It's not that far away, but I've started to nibble a little bit of it. I'm happy to buy. If they just come up with a good announcement, I'm ready to buy big time. All right, Claude. So thank you for that. Thank you for the story of yours, RUL. We've got an add-on OCL, of course, to that. So there's two good stories today. I'm going to let you guys go because I know you're a little bit under the weather at the moment. Thanks everyone for joining us. And as you can see, just with the watch list here, we've got the LGPs. Let me see if there's any Megaport still up 4.5%. So not a bad start. I don't mind it. It's let's look at XJO. Is it up or down? Yep, it's up 41 points. So that's nice. A couple of good days. Excellent. Thank you very much, Claude. Thanks everyone for joining, and have a good day. And I'll see you again tomorrow.
Thanks, Peter. Thanks for watching, everyone. Have a good day.
Cheers.